Hey, welcome to Real Estate with Soul, the podcast where we explore the heart and soul of the real estate industry. I'm your host, Khalid Nathan Alim, the real estate boy, and together we're going to be diving into the stories and experiences of professionals who are dedicated to serving underserved communities in the real estate industry. So whether you're a real estate professional, a home buyer, or simply interested in the real estate industry, this podcast is for you. So join us as we dive into the world of real estate with soul. So today I have a very, very special guest. Please introduce yourself.
Hey, Khalid, thanks so much for having me on today. My name is Alex Luboff. I'm with Prosperity Home Mortgage, and happy to be on here today and spread some good information to a lot of folks.
Indeed, Alex, thanks for your time. We want to jump into everything dealing with these loan products, these interest rates. But first, I want to kick this off by talking about the Fed. The Fed just came out making a lot of noise. I guess they said that they're kind of seeing the peak as far as where interest rates were or where they wanted them to be, and they're going to start to come down, or they've hinted at making several cuts in 2024. I don't know. What did you think about the Fed chairman's speech?
So, whenever the Fed meets and has some notes on anticipation of moving rates, whether they're up, down, or keeping them the same, it definitely has some movement with mortgage rates. So, there's no indirect tie with the Fed changing the rates to actual mortgage rates. It's other economic factors that are the cause of the Fed changing the rate in either direction that stimulates mortgage rates in either direction. Like, for example, like inflation, right? So, that was the biggest thing that made rates go up and down. So, with inflation being high, the Fed raising the rates to try and stimulate the inflation, therefore had a direct impact on the mortgage rates. So, with news that they might stay the same and/or in the future cut the rate at some point, that has sparked some improvement in mortgage rates over the last week.
Yeah, and I mean the way that I kind of look at it also is speculation because we can get to 2024 and there could be an inflation report that comes out and they kind of change directions on the things that they said in 2023. So it's like kind of taking it with a grain of salt. Like, okay, it'll be great if that does happen. But I guess the question is, would it be great? Because if rates come down, then we may see the craziness that we saw a year or two ago with open houses and lines going down the street. I don't know what you think about that.
I think you're spot on there. It's funny because over the last, like, I would say 12 months when rates went up a little bit, people are kind of on the fence, right? Not wanting to buy because mortgage rates being so high. And I'm like kind of in the reverse there. Like, I think it's a great time to buy because if and when mortgage rates do drop, you're going to see such a pent up demand and an increase in supply on housing at that point in time. So I think you're going to see even more of an appreciation in homes when the rates go down. So think about it, right? If you bought a home within the last year when rates are high, sure they're high, sure your payment's going to be a little bit higher, but you're kind of setting yourself up, I think, for the future. When the rates do go down, you're going to see a huge appreciation factor. Plus, at that point, you'll likely be able to refinance into that lower rate option as well.
No, totally understand. And I totally agree. That's why when interest rates were at 2% and 3%, we were on the mountaintop saying buy, 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 buy. Well, now we're doing the same thing for a different reason because we kind of see over the mountain as far as, okay, if these rates start to go down, all these people are going to come in. And as an age class, the millennials are the biggest class. And they're at that age to where they're buying homes. And people, a lot of people who aren't in the industry, well, maybe they don't think about it or they don't see this influx.
Right.
But before we jump into that, man, let's get to your background, man. You're a loan officer for Prosperity Home Mortgages. Give us a little bit about your background.
Yeah, so I've been doing this for 20 years. This is
Wow.
my 20th year. So I love it because every day is a new day. I get to meet new people, new situations, new scenarios every day. So it kind of keeps me on my toes. And plus, I love people. So, every time I get to speak to somebody, it's a new opportunity to learn about somebody, meet somebody. And, I love it. I think it's great. Yeah, I've been doing this for 20 years and can't see myself really doing anything different than what I do right now.
Gotcha. Now, have you always been with Prosperity, or did you start out with Prosperity, or how did you get into the lending business?
Yeah, so I in college I finished up playing hockey, and I was trying to pursue a minor league hockey career, which
Okay.
didn't work out because I was a little old at the time and pretty bruised and battered. So everybody was killing it in the mortgage business. So I actually got involved working at a subprime mortgage shop, believe it or not, pre 2008. So I worked there for about a year, year and a half. Realized that wasn't the best opportunity for me. And then since 2005, I've been working under the same boss since then, who actually just retired a couple weeks ago, which was kind of weird. I gave a retirement speech for him, which was
Wow.
kind of interesting. So I've kind of been working with the same people since 2005. So I worked with a company called First American Mortgage. We were bought by Prosperity Home Mortgage in early 2015, and I've been with them since. And again, working with the same management people, same underwriters, same processors, same closers, same team members that I have been, for several years. So there's a great little family going on right there.
Gotcha. Okay. To back up a little bit as far as the hockey career, were you a fighter?
Mhm.
I know fighting's very prevalent in hockey.
Well, so in college, you have to wear a cage, right?
Okay.
So if you're going to fight, I mean, there's really no way to get any good punches in there. So I was a very physical player, yes, but there wasn't really fighting in college. It would have been the next step
Okay.
where there would have been a lot of fighting involved. So this call might look a little bit different.
Okay.
Had I gone to the next level, I might have few less teeth than I do right now on this call.
Gotcha, gotcha. Now with prosperity, because I know there are some lenders that they're brokers where they can use any number of different lenders, and then you have in-house programs. I guess prosperity, are they on the broker side or are they more the proprietary products?
Yeah, so we're more proprietary products. So we're a mortgage banker. So that gives us a lot of different flexibility in a couple of different reasons, right? So we underwrite, process, close, and fund with our own money. So we control the process throughout the whole situation. So it's not like we're taking on a loan, shipping it to somebody, and leaving it in their hands to be competent enough to, process it, underwrite it, and close it within a certain time frame. So we have control over the process there. We do traditional, conventional VA, USDA, FHA loans. We do a lot of different state bond programs in Delaware, PA, New Jersey, which is where I'm licensed, and throughout the country as well. Um, but we don't usually service our loan, so oftentimes we'll hold the loan for a couple payments and then sell it to a new loan servicer, which nothing changes other than where the home buyer just sends their payment on a monthly basis.
Okay, and that's the thing is that I guess each loan product kind of has its audience, because there's some people who want to try out a lot of people, and there's an audience for that. And then, like you said, you guys use you say private money.
Well, kind of. So the way that like a mortgage banker works, it's our own money. So like let's say like a giant, you know what a line of credit is? It's like a giant line of credit for a
Okay.
company. So like we'll use this like giant line of credit, right, to fund a bunch of loans, right?
Okay.
And then we'll sell these bunch of loans, get our money back, pay
Okay.
back the line of credit, and then keep going. It's actually called something called a warehouse line.
Okay.
So it's a giant fund that we borrow against, pay down, borrow against, and pay down to fund people's loans, and then replenish it, and then move on to the next set of folks.
Okay. Awesome. Awesome. Well, I really were. I wanted. I really wanted to bring you on here, and the reason is because um, you guys have one of the easiest loan programs that I've ever, not excuse me, grant programs that I've ever seen. I'm getting all excited, man. That's why I'm fumbling over my words here. You guys have one of the easiest down payment assistance programs that I've ever seen. And it's something to where I've personally used, but it's super duper easy. It's a program to where you don't have any limits or any criteria except for the address. Can you
Correct.
talk a little bit more about this grant program that you guys have?
Yeah, so like when I'm talking to a real estate agent like yourself, like, my intro to them is listen, I've been doing this for 20 years and I have never been more excited about a program to be affiliated with than this because it is such a what I call a game changer. And when I
Mhm.
explain the program to a real estate agent, they actually then in turn use the same word back and say, Alex, that is a game changer. So it is called a grant, but it's unlike any other grant that's out there. And here's why. There's no first time home buyer requirement. There's no income limit. There's no credit score requirement for the grant itself. And there's no repayment of it. So as soon as the person buys the home, they're not obligated to pay anything back whatsoever. Okay. So there's no criteria there other than the address location itself. So pretty simple. So if we have somebody, and there's two components to this. If we have somebody who's looking to buy, let's say 123 Main Street, right? We have a lookup tool to see if the property address is eligible. We put in 123 Main Street and literally it either says congratulations, it's eligible, or unfortunately it's not. That is the underwrite of the grant. There's no extra underwrite other than a snapshot of the address saying that it is eligible, and that's it. So the cool part about this is, like I said, somebody could be buying 123 Main Street, and if it's in a certain census tract, that makes it eligible for the money, right? Now, the other huge component is this, and this is like the thing that I think is the biggest game changer as well. You could also qualify for the grant based on where you currently live. Okay. So if you currently rent, own, or live with family, we could look up that address as well. And if that address is, let's just say 123 Main Street, we use the same lookup tool to see where that person or people are living. And if that address qualifies, they are now eligible for up to $10,000 in grant money for their new purchase, no matter where they buy.
Wow. Now, something just kind of skipped past me the first time we talked about this. You said if somebody rents at a particular place, so you don't have to own a property.
That is exactly right. Like you could be living with mom and dad, you could be renting 123 Main Street. You don't necessarily have to own a home to get it on the new home when it's based on your current address. It's just where you live. Like you could even be moved out into temporary housing. And if 123 Main Street in the temporary housing meets the census tract, then congratulations, you can get up to $10,000 in grant money towards your purchase.
Wow. So if I live in a certain place and that qualifies and I move to a certain place that doesn't qualify, do I still get the money?
So it's where you live at the time of the application. So when I
Okay.
collect all of your information to get you,
Uh,
let's say, pre-approved, right? You
mhm.
live at 123 Main Street at that time. And if 123 Main Street is eligible, then that means you qualify for the grant. So the grant doesn't stay with you just because of your address at that one point in time. So like if you move to like a couple different spots afterwards,
Mhm.
that doesn't make you eligible. So it's where you live at the time when we take your information for the application.
Wow. Okay. So if I live at 123 Main Street and it qualifies right now, just say I'm renting. Okay.
Hmm.
So I'm renting at 123 Main Street. And then I'm moving to Villanova.
Hmm.
Okay. Which usually you wouldn't be able to qualify because this is a high rent, high income area. Um, I would be eligible.
You would be, absolutely. So just to give you, some examples of like what I've done with in the past. So like I have a lot of Philadelphia clients that buy in and are moving out of Philadelphia, right?
Hmm.
So I have people that are moving out of certain census tracts that qualify for the grant, but where they're buying doesn't qualify for the grant. And it doesn't matter where they're buying because it's based off of where they currently live. So, in some cases they were buying, in very expensive neighborhoods in New Jersey, and they qualified just because of based on the census tract that they currently live in right now.
Yeah, that's a game changer. Um, that's absolutely crazy to have
Yeah.
something like that because I've never in my career have seen something like that. And we've talked and we have this particular grant going on for one of our clients now. Um, but I missed the part about them renting. I thought you had to own a property, and then if you own a property and then you buy somewhere else, then you'll get the grant. But you're saying even if you're renting somewhere,
Yep.
you can buy. And as far as units, can you use this for a multi-unit also?
Yes. So the grant's only eligible as a primary residence. So that's very important component here.
Okay.
But it's for a primary residence 1 to 4 unit. So we could do a 4 unit purchase if somebody's going to live there as their primary residence. If the property itself or where they currently live is census tract eligible, then they can get up to $10,000 in grant money. So like I'm currently doing a 3 unit purchase right now for a conventional loan with 5% down, and we're giving them 10 grand in grant money to help them out.
Wow, wow. Okay. And can this be stacked on top of other grants? For example, I have a lot of clients who have the Philly first. Is this able to be
Yeah,
stacked on top of that?
yeah. So there's different stacking things. So like our mutual clients that we've referred to a couple times, that person actually qualified for another $1,500 grant. So oftentimes, if they're a conventional loan candidate and they are first-time home buyers, there's other census tract grants that are out there. One's 5,000 and one's 1,500. So
Mhm.
usually for a first-time home buyer, if they qualify for our census tract grant, they will likely then qualify for those as well. So there are some times where we give 10 plus 5 or 10 plus 1,500, right? And that was our one client that got 10 plus 1,500. But on top of that, they are all stackable with the Philly grant. So if you somebody in Philly that's getting the $10,000 grant, they can get our $10,000 grant. And then if it's a conventional first time home buyer, get an extra 5 or an extra 1,500 on top of that too. So there are certain circumstances where we're giving them so much grant money that it covers down payment plus closing costs plus money to buy down their interest rate too, because there's so much money that there's not enough down payment and closing costs. So we create more closing costs by buying down their interest rate and getting them to a lower interest rate program because of all of the excess grant money that's available in some circumstances.
Oh wow, yeah, that's definitely a game changer. Now, a lot of people have credit issues. I guess
Mhm.
what's the lowest my credit score can be in order for me to qualify for this grant?
So that's the best question. There are no overlays, which means extra criteria to qualify for the grant in terms of credit score. So it's basically, do they qualify for an FHA loan? Do they qualify for a VA loan? Do they qualify for a conventional loan? So 620 is the conventional credit score requirement. 580 is the VA and FHA minimum credit score requirement. So basically, if you have those credit scores, you are eligible for that type of financing, which then makes you eligible for that grant, assuming they live in or are buying in that census tract.
Wow, so if I have a 580 credit score, I got a 580 credit score, I'm still eligible for this grant. And if I'm understanding you correctly, there's two ways that I can be eligible. I can be eligible based on where I'm buying, and I can also be eligible based on where I live right now. Is that a correct understanding?
That's 100% correct.
Wow, wow. And the only thing that I have to do is find out, hey, where I'm moving to or where I'm going to, is it eligible? Now, is it $10,000? How should I say this? Is it up to $10,000? For example, if I'm buying a house, what's the lowest that I can buy? Like 50,000 or 60,000?
So this is where it gets a little complicated, and
Okay.
this is why I always say up to 10,000, right? So I'm going to kind of separate out different types of financing and
Okay.
explain why the up to 10,000. Okay, so I'm going to start with the easiest one, which is FHA. Okay, so a lot of industry professionals know that with an FHA loan, you can't get more than what is called a 6% seller assist, right? So the mortgage technical term for that is something called interested party contribution or an IPC, which
Mhm.
means buyer can't get more than 6% of the price from lender, from seller, builder, or interested party in the equation, right? So our grant with an FHA loan counts as part of that 6%.
Okay.
Okay, so like as a for example, if somebody's buying $100,000 home, 6% of that is 6,000, right? So with an FHA loan, they would be capped in 6 grand in grant money from us. Okay. Now, with a conventional loan, as a first time home buyer, there's no cap, right? So they can get the grant, they can get seller assist, they can
Okay.
get other grants, other down payment assistance options, and there are no extra limitations like I just referred to with an FHA loan. Now, conventional non first time home buyer has similar limitations that of an FHA mortgage, where
Mm,
if you're doing less than 10% down, there's a 3% cap on how much we can give you in grant money because it counts towards something called an IPC, which is the interested party contribution. So we'll use that same example. If somebody's buying a $100,000 home, we're going to be capped out at 3%, which is $3,000 in grant money if
mm.
they are a non first time home buyer and doing less than 10% down.
Okay, that's an important factor. That
Hmm.
non first time home buyer and less than 10% down, because a lot of people just think it's kind of an open door. You can kind of just do what you want to. Um, but because I have a lot of people that house hack, so they already have their home, their duplex, and now they may be
Right,
looking for their next home, which may be a single family. So
right.
if they're not first time home buyers, and even if they get a conventional, all right, so if they get a conventional, but if they get a FHA, they can get up to 6%.
Correct.
Okay.
That's correct.
Okay.
So like the kind of gauges, like if you're around like 170,000 plus with FHA, you can get like the full 10, right?
Mhm.
And if you're in the low threes for a conventional, you can get the full 10 all the time.
But you can't get seller's assist on top of that.
That's correct.
Okay. So in that particular situation, would it behoove somebody, could they get the money to buy the rate down and then also get seller's assist to kind of combat that, if that makes sense?
So they can, as long as the grant plus the seller assist doesn't exceed that interested party contribution percentage.
Okay. Okay.
So I'll give you an example, right? So let's say somebody buys a $300,000 home, right?
Mhm.
FHA, 6% of that is 18 grand,
Okay.
right? So we can give them 10 for the grant,
Mhm.
right? And then there's 8 left over that they can get in seller assist.
Gotcha. Gotcha. Okay.
And where this is becoming super helpful is in situations with FHA buyers that needed seller assist to make work. And in
Mm.
this environment, it's less likely to get an offer accepted with a seller assist. So our grant is like substituting for what would have been that seller assist. So we're making deals work because now buyers get the money that they need and sellers don't have to concede and give that concession. So
Mm.
it's a way to bring buyer and seller together using our money to do it.
Right. And if you have a real estate agent like myself, you can definitely get seller's assist, like the deal that we just had. We got that gentleman and his wife 3%
Right.
seller's assist. So
Yeah.
you get an aggressive realtor like myself, that you can still get seller's assist, and you can get this grant on top of that.
Right.
And I mean, they're virtually going to be kind of walking into this with no money down. Now, my question to you is, some grants you can't get money back at the table if it's
Hmm.
over.
Hmm.
Does this grant act like that also?
It does. So you can't walk away from the closing table receiving cash back, right?
Okay.
So you cannot get a check back from the title company. So an easy fix for us to combat that is we just proceed as normal, right? And
Mhm.
then once we're getting close to closing, we're getting final numbers, and we see that customer is getting $2,000 back. What we could always do is waive the deposit from the agreement of sale. So what happens is the seller kind of gives the buyer back their money at closing. You know what I
Mm,
mean? So
yes.
then they're not receiving cash back because we take away the escrow money deposit from their closing disclosure. So it's like they never gave it.
Wow. I don't think I've ever heard that before.
Yeah, that's how we work around that. Yep.
Okay, yeah, and
Yeah.
that's the reason why you want to get with experienced professionals, because there's a lot of things that you can do out there, but it's kind of like, hey, if you don't know what you don't know, and you're going with individuals that you got from your sister's cousin's um, friend, who just got into the business last week, that's fine and dandy. But this is the biggest financial transaction that you're probably going to make in your life. So having experienced individuals would definitely behoove your entire situation. Um, Now, of course, this money is going to run out at some point in time. Is it any indication when this program is going to stop?
So our initial assessment, so we have over $18 million in a fund that we have, which we projected at the beginning to last about 3 years. Okay.
Okay.
But I probably think it might run out a little bit sooner. And let me tell you why. So, one thing we didn't talk about is refinancing and being grant eligible
Mm,
numerous times after somebody buys, right? So this only works if you're buying in the census tract. It doesn't count if you're coming from the census tract. Okay. So let's pretend I buy a house, right? I'm buying 123 Main Street. It's grant eligible. I settle on it and great. I had this $10,000 grant that enabled me to get in this house. In 12 months, if we did the original loan, we would have to wait 12 months. You would be eligible for the grant again of up to $10,000, which means we could utilize up to $10,000 in 12 months from now to apply towards closing costs and or interest rate buy downs. Because typically refinances don't cost $10,000 to do it. So it'd almost be like a free refinance. You're using the grant money to fund your refinance 12 months down the road. So talk about a help somebody get off the fence maneuver with grant money. I mean, you're getting 10 grand for the up to 10 grand for the purchase, and then potentially up to 10 grand on a refinance 12 months later. I mean, that's just setting yourself up pretty. And we will actually be able to continue to refinance you every 12 months until that grant money runs out, which is probably going to be somewhere between, like, I would say maybe 2.5, 3 years.
okay, hold on. Okay, hold on. All right, so I buy a home right now. Do I have to be a first time home buyer?
Nope.
All right, so right now I'm looking for a home.
Hmm.
I have a 580 credit score, and I find a home, just say in New Jersey. I find a home in New. I found a home in Jersey, and I used the $10,000 to purchase that home. What you're saying, or what I understand from what you just said, is that is it within 12 months, or I have to wait 12 months as far as the refinance?
We just have to wait 12 months.
Okay, so
If we did the original loan, if we
okay,
didn't do the original loan, we don't have a waiting period, but we just have to wait 12 months to let's say use the grant again or be grant eligible.
okay, so if Prosperity did the original loan where I got the $10,000 from Prosperity the first time, okay,
Correct.
and then I wait 12 months. I wait 12 months and see rate wise if it behooves me to refinance. If it behooves me to refinance, then I'll get $10,000 more to do the refinance,
Correct. Up to $10,000 in grant eligibility on the refinance.
which may put me in a better position as far as payment wise if rates do go down.
Correct. And they don't even have to go down a lot because 10 grand, like let's assume like they're eligible for 10 grand at that time.
Mm-mm, mm,
10 grand is a lot of money to apply towards a refinance closing cost situation.
mm.
So there probably isn't going to be $10,000 in closing costs. So what that means is we would make $10,000 in closing costs by charging the customer points, which are closing costs to get below market interest rates, right? So think about it right now. So let's say today the rate's 6.875.
Mhm,
They don't really have to be much better than 6.875 in a year from now
mhm.
for us for it to make sense for them to refinance because we could likely buy their interest rate down much lower than 6.875 with the excess grant money that's available. Just as an example.
Okay, okay. So at that point in time, and if you guys do the original loan, we just revisit this in 12 months and see does it make sense as far as the refinance or not.
Exactly. And there might be some people on this call that are interested, right? Like if we
Mhm.
didn't do the original loan, there's no 12-month waiting period, right? So if there's somebody on this call right now that's listening and say, well, I would like to see if my home meets the census tract requirement. If they go in, plug in 123 Main Street and it's eligible, it doesn't matter how long ago they closed on it. We can make them grant eligible because we didn't do their initial loan. They don't have to wait the 12 months.
Wow. Now for that, I would just need the address, and we would have to see if the address is eligible.
Exactly. It's literally going to our lookup site, which takes 8 seconds to plug in an address and hit enter and know that you're grant eligible or not.
Wow. So yes, if you're out there and you already have a loan, just say that you have a loan and you just want to see, hey, does it make sense to refinance? And I mean, I forgot what the statistic was. I think they said like 60 or 70% of the nation has loans that are under 4% or 3%. So
Hmm.
in most cases, it probably doesn't make sense. But I'm sure there are people out there that have loans. I know my first loan that I got out when I was I think like in 2005 was like 9%. Okay,
Yep.
now I've since sold that home, but I'm sure there are people out there that have loans that are 9%, 8%. But this is just a way for you just to check. Hey, doesn't make sense for me to refinance this loan.
Absolutely. I mean, a lot of people are tuned into the news, like we talked about at the beginning, like hearing Fed cutting rates, interest rates dropping a little bit. So if they settled like within the last year and they have a rate that's, somewhere in like the high sixes, sevens, or maybe even eights, right? Then, as soon as there's a small downtick in the rates, it'll make sense for them to refinance because they can utilize this grant money towards their closing costs and even buy their interest rate down a little bit lower if that situation presents itself.
Okay. And again, just want to make this disclaimer. All this that we're talking about homeowners, not investors, but people who are
Correct.
residing
Correct.
in that particular home. So,
Correct. Always primary residence. Correct.
right. And I mean, this is great for our house hackers. If you've been hiding under a rock for the last 5 or 6 years, house hacking, this is something that you can do. House hacking is when you buy a two, three, or four unit, you live in one, and you use the rent from the other units to offset your mortgage. So, in a situation like this, we can use this grant, and we can also stack them with other grants. In Philadelphia, you have the Philly First. Upper Darby has a $10,000 grant. You also
Correct.
have Chester County that has a 10,000 grant also. So you have many grants out there that this can stack with, where you can virtually be getting into a house down payment free, because this is people's issue these days, is getting the down payment, because you're already paying rent. You're already paying rent, so you can do the monthly payment. It's just a down payment.
Right.
I guess, what are the results that you've seen, I guess, from people who have completed this loan?
I mean, just like pure happiness because it makes situations happen, right? I mean, I can't tell you how many times I would approach a real estate agent and, my intro is like, listen, I've been doing this for 20 years and I hate using like the I've been doing this for 20 years comment, but, and I say this and I say, listen, no BS. And I
Mhm.
say that like no BS. This is a game changer. And let me explain in situations where it could, help you out. And the good news is I have such solid relationships with people over the years that they like listen to me and they
Mm,
actually take it in. And if they do that, they're able to apply this right away to real life situations. And I can't tell you how many transactions in just over the last couple months that became transactions because of this grant
mm,
that wouldn't have been transactions prior to. So there's so many success stories there. Like, like I said before, people that needed seller assist and couldn't get it, right? You mentioned all those local grant programs, right? They all have income limits, right? So there's one called the Media Fellowship in Delaware County that we're stackable with, right?
mm,
But they have an income limit, right? So they're sending me all the people that don't qualify for their grant that apply for it because they make too much money,
mm.
right? So what would have been a no, sorry, can't help you out because of the relationship I have with them now, like I'm getting the overflow of people that make too much money to get grant money, which makes it possible for them to purchase a home.
Man, this is awesome. That's enough to be said. That's enough. That's enough right there. If you're seeing this and you need down payment assistance, there has not been an easier program that I've seen. And also, if you're looking to refinance, let's just get your information and see, does it make sense. Doesn't make sense. These programs are out here for people to take advantage of, and that what this is the problem with most programs, is people don't take advantage of them. And there's a lot of wasted money out there because people don't take advantage of them. Um, Before we go, is there anything else, I guess, that you want to say about the program or any other programs?
So the one thing we do a lot of is something called PHFA financing, which has an amazing down payment assistance option, right? Pretty soon we're going to be stackable with that too at some point. So once I get that information, I'll share that with you. I'll make that public on social media too,
Okay.
because that program allows for 5% of the price in down payment assistance. So when you couple that with an extra 10,000 potential grant money, we're talking, $1,000 out of pocket in some situations, if the numbers shake out like that. So that will be a true another game changer that will exist. So I'll definitely keep you in the loop and keep the public informed when that becomes available.
Yeah, that's gonna break the internet if that happens. That's gonna
Yeah.
break the internet if that happens. So definitely stay tuned, man. But Alex, tell my viewers where they can reach you at.
Yeah, so best is cell phone 267-303-3368. I don't have hours, so as long as I'm awake, I'll pick up or text you back. So I have a great team that works with me too. I have a partner, Anthony, who's amazing as well. So between the two of us, we're able to service everybody at pretty much any hour of the day.
Well, listen, if you got a 580 credit score, and there's no reason why you shouldn't have a 580 credit score, we're getting you a home. Okay, I hate to sound like that guy that's on the radio that's about the cars, and he always be like, "Hey, if you're breathing, you could get a car." I hate to sound like that, okay, but if you got a 580 credit score, there's no reason why you shouldn't be a owner. I keep telling, and I'll keep on saying this, that buying a home is the foundation of generational wealth. It's the foundation of generational wealth. So if you don't have a home right now, now is the time, especially now because a lot of people, their eyes are on what, or the end of the year, and that so they're not really looking. So activity is way down. Activity is way down, even though we still don't have enough homes out there, but activity is way down. So this is the time. There are sellers that are bending over backwards to sell their home. And with this program from Prosperity, you have the seller's assist that you need to get into the property. So definitely give Alex a call. And you can find him on the internet also. If you can't find his information, you can definitely call me. Go to sellwithkhalid.com. All of my information is on there. And any last thoughts?
No, just thank you so much for having me on here. I hope this information, gets spread out nicely and it's able to help some people out there because that's the intention of this.
Cool, man. And it's Colin Nathan Aleem, the real estate boy. If you're looking to buy a home, sell a home, or invest in real estate, I got you.